Starbucks did not become the world's largest and most profitable coffee chain by accident. Instead, this multinational caffeine dispenser has grown through a series of calculated actions, while also using a few tricks and maneuvers along the way that they would not be exactly thrilled that you knew about. What started as a neighborhood coffee shop in Seattle has expanded into one of the most iconic brands in the world, with over 35,000 locations spread across 84 countries. They now generate over $30 billion in sales each year and raked in a bottom-line profit of over $3 billion in 2022, despite unsteady economic conditions. But what you may not realize is that a large portion of that revenue has nothing to do with coffee itself. In this video, we will expose all the ways that Starbucks continues to profit, both with their core products, as well as through their side ventures that are quickly becoming even more lucrative than just roasting coffee beans. Let's first start with all of the product-related tactics that Starbucks uses to drive their profits. It's no secret that every company in the world wants you to spend the most you can each time you visit their store, and then also have you become a returning customer. One way Starbucks achieves the first part of this equation is by enticing you to buy a bigger size than you may need. Starbucks uses some psychological pricing tactics to help boost their revenues. The first ploy is based on the sizes they offer. In the past, they used to offer just two sizes, a small 12-ounce cup and a large 20-ounce. The majority of customers opted for the small since it was cheaper, and also most people don't really need 20 ounces of coffee to get their day going. But Starbucks then introduced a third medium size that slotted right in between. Thanks to what is called the compromise effect, customers quickly weigh in their mind what the best bang for their buck is on the menu, and then settle for the choice in between the two extremes. The majority of today's customers now gravitate towards this compromise of the 16-ounce medium size, which gives them more product than the smaller version, but at a lower cost than the excessive large size. Speaking of size options, most of us are familiar with the classic Starbucks size names of Tall, Grande, and Venti for their small, medium, and large sizes. But there is actually a fourth smaller cup that is not always advertised. There is in fact a short size that is just 8 ounces and is always the cheapest version of each drink. But if you don't easily see it on the menu, then chances are that you will just go with one of the bigger sizes and spend more. Another way Starbucks has priced their way to more profits is through the psychology of prestige. They were one of the first large chains to introduce a premium price on a rather commodified product that is coffee. While it is debatable if their coffee is superior to other brands, Starbucks intentionally positioned their prices to be some of the highest in the market when they first started out. Irrationally, many customers equate a higher price to higher quality. And that is exactly the phenomenon that Starbucks was hoping would happen. It helped them to establish their coffee as a premium product that warrants a higher price. To this day, those prices have stuck around, and the Starbucks brand is universally viewed as an upmarket treat compared to other chains like Dunkin' or 7-Eleven. To try to entice you to become a returning customer, Starbucks frequently launches limited-time offers based on the season. They'll often reintroduce customer favorites like pumpkin spice latte, or whip up a new variation of a classic drink to make it seem original and exciting, yet familiar at the same time. These gotta-try flavors then become an anticipated annual routine that keeps customers coming back every time the seasons change. Of course, the most successful version of this strategy is with their famous holiday cup that features a new design every year. That iconic red cup has become a must-have status symbol for Instagrammers across the globe. Finally, Starbucks' clever rewards card system entices you to only buy your daily coffee from them, since about 16 purchases earns you enough credit to redeem for a free coffee. The Starbucks card is actually the topic of our next big secret, which now shifts the focus away from their products and onto the ways that they make money that nobody, not even Starbucks, could have imagined. The Starbucks card was launched in 2001 and works as a typical loyalty card. You can keep track of your purchases and earn points that can accumulate enough for you to get free stuff. There are also some bonus incentives, like more points earned per purchase if you use the card, and free points for your birthday. To make it easier to purchase coffee, Starbucks also allows their customers to preload these cards with cash, so that they can use it just like a debit card while also earning points. In 2009, Starbucks was also one of the first major companies to offer their loyalty program through a digital app, which also made it easier for customers to load and track their money. This hugely popular program has now reached over 30 million members that currently have over $3 billion loaded onto their Starbucks cards and app. If Starbucks was a bank, that level of financial assets alone would rank them in the top 500 out of the roughly 5,000 institutions in the US. But since they are not a bank, they are free to manage their deposits without worrying about any financial regulations. Essentially, customers who load their Starbucks card with money are providing the company with an interest-free loan. Since customers can only use that credit at Starbucks and it can never be withdrawn, the company knows that that money is also eventually paid to them, instead of paid back to the customer like a traditional loan. Therefore, Starbucks is receiving a 0% interest loan on $3 billion every year, which they can spend on expansions, paying down debts, or even investing in the market. $3 billion that earns a modest 5% return would be $150 million of extra cash that Starbucks could generate every year. That's not the only way customers are providing free money to Starbucks. The company also benefits from unused gift cards and unredeemed cash from loyalty cards. Those amounts totaled $196 million in 2022, with virtually zero cost for the company, which therefore helped to make up about 6% of their net income. The final hidden way that Starbucks earns their money is through the use of their brand name. Since they want to preserve the quality and integrity of their brand, Starbucks rarely offers private franchises, and instead, the Starbucks Corporation owns the rights to the majority of their locations. But there are places where it is difficult to get into, such as airports, as well as corporate relationships, like the one Starbucks has with Target, that make for lucrative locations to set up a store. That's where they use a licensing model to help grow their revenue. In a licensing relationship, Starbucks collects a fee on all of the branded products and equipment sold to the licensed store operator. They also receive royalties on all of the sales to customers. Meanwhile, the licensees are responsible for all operating costs and capital investments. Therefore, it is like free money for Starbucks, since there are almost no extra costs for them other than some small administrative salaries for their corporate team to maintain the program. Starbucks continues to expand on this strategy, as licensed stores generated $3.7 billion in revenue for the company in 2022, up almost $1 billion from the year before. So, what is stopping them from licensing out their brand to anyone who wants to sell their coffee? The true cost for Starbucks in this case is their reputation, which has been carefully earned over the last 50 years and can be harmed if they lower their stringent standards to become a licensee. Although Starbucks has used all of these clever ways to increase their bottom line, we think that they have missed out on a pretty significant opportunity as well. In the real estate world, there is the popular phenomenon known as the Starbucks effect. Since Starbucks employs a dedicated analytical team to research the best locations to open new stores, they often find places that are primed for future growth and appreciation. They also act as a signal. If Starbucks believes it is a good location, then other businesses may also think that they should open a new store in the area. Therefore, the Starbucks effect is how one of their new coffee shops can actually transform a whole neighborhood, as well as the property values around it. A research study done by the real estate company Zillow showed that the property values of homes in the US that were located within a quarter mile of a Starbucks went up 96% from 1997 to 2014, compared to just 65% for all other homes. Essentially, Starbucks alone has the power to help all the buildings around it appreciate in value. That would be great for them too, except that they lease the majority of their locations. If they own their stores like McDonald's does, Starbucks could have become a real estate empire that could single-handedly influence every market that they entered, which would then increase the valuation of their company as well. The success of Starbucks can be traced to their ability to establish a premium pricing model alongside one of the strongest loyalty programs in the world. In turn, that loyalty program helps them generate billions of risk-free cash to use, while also providing pure profit from any unused funds. On top of that, they have monetized the strength of their brand through a licensing system that nets the company billions more in top and bottom line growth. So the real question is, can Starbucks keep all of this up? What do you think? Are these strategies sustainable for Starbucks to allow them to expand? Or do you think there is a limit to how high they can push their prices, retain loyal customers, and dilute their brand through licensing? We believe that Starbucks will continue to expand their licensing business, but that will eventually lead to an oversaturation of the brand and sales will start to stagnate. Let us know what you think in the comments below. If you enjoyed learning about these hidden facts, then please subscribe to our channel. We do all the research so that you don't have to. Join us next time, and thanks for watching.